If you guys have been keeping up with my YouTube shorts, you'd see that I've been posting some of my trades every day, right? Just to keep you guys included in what's going on. So as you know, if you sign up with Henko Trade, they do match your sign up with a bonus, which is really good to give you more leverage for trading. So guys, I am trying to double this trading account by successfully taking really safe trades every single day. So if I don't have a setup, then I won't take the trade. If I do have a setup, then I take the trade at a really decent lot size, not over risking this trading account. And so far, so good, guys. I was able to make about $2,900 so far this week, and it is only the third trading day for me. So let's see what today brings. I do have an area of interest that I do plan on buying to the nearest high if we can respect this low here. I'd take this trade from this entry and exit at the top of this high. So if you guys sign up using the link in my description, you guys will be offered a sign up bonus. All you have to do is ping customer service and they will give you the bonus. So let's get into the charts. US 30 shot up almost over 800 points yesterday, which was Tuesday. Really amazing. And I want to show you guys how you could have been able to capture the move that I captured. So let's start from the higher time frame, guys. You have to understand the direction in which you're going in before you even place a trade. So before even thinking about executing or setting any limits, you have to know, are you bullish or are you bearish and why, right? So I personally do not like opening the charts and just trading in any direction. Sometimes I do it just to show you guys an opportunity at a particular time, but most of the time I am waiting for my setups to come to life. So as you can see on this daily time frame, there's one thing for sure that's happening here, and is that the lows are getting higher, right? Lows are getting higher. We can't ignore the fact that US 30 has been bullish and is still bullish, right? We are continuously breaking structure to the upside. So any trades that we're taking as far as high probable setups would be to the upside. What is a high probable setup? It is a setup that's going to last longer and have a less of a risk of being stopped out, especially if you can get in at a good entry. So we're breaking structure to the upside, guys. We are still bullish on US 30. However, right, in order for us to be able to take advantage of this opportunity up when price is already deep in premium, we want to look for a swing high and swing low, and we want price to reach back into a discounted area. So right now I'm seeing that we finally have some type of rejection at the top. So I'm thinking that today will possibly bring us down into a discounting area. But if you're paying attention to US 30, you would know that US 30 has not been reaching back to order blocks, and it has not been going into discount. So I'm really curious to see what happens here. How could you get in a setup if it's not reaching back or pulling back into particular areas such as OBs or even break of structures? Guys, you have to get your setups on the smaller time frame. So yesterday's setup, which was Tuesday, I'm gonna go ahead and turn on session days of the week. I got my entry on the 5-minute time frame. Here's Tuesday, and I'll show you guys some price action before it even played out. And what I'm gonna do is do a little bit of back right here. So as you can see, here's Tuesday. Let's first pay attention to how Tuesday opened. So we had a gap here. And as you guys notice, we want to treat these gaps like imbalance, right? US 30 has a thing with definitely going and filling in the gaps. So here's that gap, right? We have that consolidated period right here, consolidation. And because we're bullish, guys, we're not looking to break the lows. We're not looking to go down and take out these lows. We're simply looking for retracement, right? So if you can see here, here's a swing low, here's a swing high. Price comes down into discount area. If you're paying attention to Monday, Monday had created demand. So we have demand here. and we're not looking to break out of this demand zone, not yet at least, because US30 has not been going deeper into discount, but we were looking for this consolidation. After this consolidation, going down into the gap, and we were looking to go back down into discount, which price did right here. So as you can see, price comes back down into discount, but we're not looking to break these lows. We're actually looking to respect these lows, and price continues up to create a new high as expected because we are bullish. So because we're bullish and price is now in a premium area, and now we have a low to work with, right? And we can see that we took out this consolidated area here, and price came into this particular area and it rejected from it. We're not looking to go bearish because price came into this area and rejected from it. We're simply expecting a rejection to go back into discount. And while price is in premium, guys, it is your job to go in discount, and it's the 5-minute time frame. Head into discount, look for your areas of interest. And understanding the trend and understanding the direction, it saves you a lot of confusion. Because even if you sold price down, you should have been looking to exit at this area. Why? Because the more high probable setup is the bullish one. So here's that buy side sweep, sweeping out the highs from this consolidation. We don't want to trade the consolidation, remember. So we sweep these highs here as expected. And this could have been an entry, but you would have to understand where to exit, right? So once you get into this sell, right, you are simply looking to exit at a discount area, wherever discount may be. Because remember, guys, we're looking for entry. So we're measuring that swing high and that swing low here, right? For the purpose of premium and discount. So if you're selling in a bullish market, you guys should be exiting in discount. But if you guys decided that you wanted to hold the account, you have a low that was that could have been targeted right here. This is an early buyer. People who got in right here. The issue with this entry is that it's internal. This is an internal entry, and price has left a low, and these traders are subjected to be stopped out of this market because it is internal. I'm gonna go ahead and write internal right in there, okay? So this is internal, and this is a low kind of left in the middle of nowhere. Was it a successful trade? Yes. If you took this trade from this level, you would want to exit where there may be a bearish OB. So this is an opportunity from here to here. This is another opportunity from here back down to this low, from here to discount, or from here to this area. Now, the thing with trading against the trend is that the market does not owe us to go back to the area in which we want it to go to. It could be satisfied with going back to a break of structure, to discount, or simply targeting a low. So it doesn't owe us to go all the way back down here. When you trade back down to these particular areas, trading against the trend, you do set your account up for some type of drawdown or loss, right? Because we have expectations and we want to just follow the actual trend. So the safe thing to do is always exit at the nearest high, the nearest low, exit at premium when you're buying, exit at discount when you're selling in a bullish market, things like that. So here is my focus as prices in this particular area, because I know that we're super, super bullish. And I had the question asked to me, how do you know where to exit when price has reached an all-time high? Well, guys, you don't know. What you want to do when you're buying in a situation like that, you can target the swing high, but if you decide that you want to hold your trade longer, or you have a feeling that price is going to go past that area and you want to still be a participant in that, what you can do is trail your stop loss. Let's just say that this was your take profit area for 151 points. And we well know that because I discussed that earlier, that price went up to about 800 points. What you can do is move that stop loss up, right? So even if you're going to stay in this trade until price takes you out, what you want to do is take your stop loss. Each time that price is breaking structure to the upside, you want to move that stop loss up and trail it and trail it and trail it. And this would work for you if you decided that you wanted to hold this trade until it started to reverse back. Right. So let's go and see how this played out. Remember, when price is in premium, you do your footwork in discount. When price is in discount, you do your footwork in premium, right? Always following the trend. So let's go ahead and press play here. Okay, price plays around just a little bit and then it aggressively comes into this zone, this OB that we have marked out. However, we do not want to be moved by the candles. Do not allow the candlesticks to intimidate you when you are confident on your entry. There are two things that can happen. You're going to have a really good trade or you're going to be stopped out of the trade, and that is a lesson, right? Do not be afraid to be stopped out. Always use risk management, guys. The goal is to grow your trading account, and we're not going to rule out the fact that losses happen. Those are called lessons to me. And if you guys are ever stopped out of a trade, you want to be stopped out as soon as possible because number one, you're either trading on the wrong side of the market or your entry is incorrect, right? So stop losses actually are helping us. It's actually a favor, and appreciate those stop losses, right? Sometimes our stop losses are way too tight, so you want to be mindful of that. Always give a little breathing room beneath your entry, but do not allow the candles to make you afraid of feeling confident in yourself. Always be confident. Confidence beats everything, right? So here you go. Price finally comes into that area, makes it back to premium. We're looking to take out the swing high, which we did. And this is when you start to trail that stop loss all the way up because price shot up so much Tuesday. And many of us were able to take advantage of that opportunity. So in this case, if you were trailing your stop loss and maybe you had your stop loss up here somewhere and then price came down beneath an area that you were comfortable with, you probably would have ended the trade um, being stopped out, but the profits were massive. Here's about uh, if you got out right here, that's still about 532 points if price did take you out. But the most important part is that a lot of us definitely seen this area and it was a beautiful trade. It played out wonderful. And you always win by trading on the right side. So guys, thank you guys for watching. And if you guys are ever interested in joining my live sessions on Saturday, click the link in the description. Make sure you guys sign up with Henko Trade and put those deposits in. And if you are interested in the US30 Bootcamp, you can always find that on my website as well. Thank you guys for watching. And if you gain any insight, please consider subscribing and liking this video. Later, guys.